Hello everybody, this is Ghabour, CEO and co-founder of Key Advisors Group, and today's a big day for the market because we got a pretty big data coming in today, which is CPI. The CPI number came in very, very good, meaning that inflation is absolutely cooling off, especially from where we were a year ago. So we've come a long, long way. The million-dollar question is where do we go from here? In the short term, I think the momentum is going to continue to cause this market to go up, because of the fact that investors are going to look at this number as very positive and pile more money into stocks as we continue to see this rally broaden. But the million-dollar question is where it's going to happen in August, what's going to happen in September when it comes to inflation. Our concern that we have is in regards to the Fed has continued to double down on the fact that they want a 2% number. And right now, core inflation is over double that. So they're not even close to where they want to be. Personally, if they gave this market patience and time, you would ultimately get core down to that 2% number in our opinion. But I don't know if the Fed's going to have the patience to wait. They've indicated several times that they plan to hike more than one time. Many have argued that one and done should be enough. I don't really disagree with that. But at the same time, it doesn't matter what my opinion is. It matters what the Fed is actually going to do. So if the Fed is going to continue to tighten until they see us getting close to that 2% number, we could have 2 or 3 more rate hikes ahead of us. And to me, that would be very detrimental to the economy right now. Because over the last 3 months, ever since the banks failed and the government came in and bailed out the depositors, we have seen a disconnect between leading economic indicators and the stock market. And right now, the stock market doesn't care about those leading economic indicators, which means as an investor, you shouldn't care either from a near-term perspective. So we have finally started dipping our toes back into the water on the equity side, but we have a very short leash on these equities. We do not think that we are clear from a recession. We just think our recession has been kicked down the road a little bit longer. We'll probably, in our opinion, see a recession if the leading economic indicators continue to trend in the direction that they're trending in, and jobless claims continue to trend in the direction that they're heading in, and bankruptcies continue to trend in the way that they're trending in, and if consumer balance sheets and excess savings continue to trend in the direction that they're trending in, we will probably have a recession sometime by the first quarter next year. Now, I'm the first to admit that when we came into this year, we thought that recession would happen sooner. It's been a very, very resilient labor market. And this labor market and the amount of excess cash that consumers and businesses have had allowed this thing to run longer than what many expected, us included. But it doesn't change the fact in regards to where the trend is going. So are we buying right now? We did. We bought some more equities at the end of June. We went into healthcare. We went into India. We like aerospace and defense. We're even looking at energy sector as well too. But again, this is more likely just going to be a trade for us versus a long-term hold. We're very dynamic in the way that we manage assets. So we are not afraid to go in. We're not afraid to go out as long as it's within the risk tolerance of our clients. So we're not out of the woods on inflation because again, remember when you get these types of rallies, that many times can be inflationary. And a big concern that we would have is this sucks everybody into the market thinking that the worst is behind us on inflation in the economy. And then we get a reacceleration in inflation. And we're seeing some reacceleration on the housing side. We're seeing services stay really sticky. So to think we could not get a reacceleration of inflation in August and September and cause the Fed to continue to raise rates, I think is naive. So I think the best course of action right now is to really be patient in regards to spiking the ball, thinking we're done with the inflationary fight. Don't fight the tape, depending upon your situation, you can certainly get a few points in this market as this rally more than likely continues. But as I've said, we're going to keep things on a short leash. Although we're very bullish on healthcare, we're very bullish on India, We are not going all in at this point in time because we got one inflation number that everyone is celebrating today. So patience is going to continue to be key. We know everyone is not built for patience, and that's fine. But at the end of the day, we're going to do what we think is best for our clients, and you have to do what's best for you and your families. So I wish you the best and hope you make this a winning week. Thank you, and have a great day.